All right, y'all, why a little bit can go a long way. Story time in the classroom with your favorites. Yeah, you know we more room around here, baby. But look, check this out. So, what I learned in a recent transaction is sometimes a little bit goes a long way. What does that mean and what am I talking about? Well, go ahead and stay tuned. Go ahead and make sure you hit that like, subscribe, and ring that bell because that's how you can help this channel grow. Now look, what I learned recently in a transaction, see, because of the fact that a lot of insurance companies like Farmers Insurance and a lot of other ones have pulled out of home ownership insurance for properties, especially right here in California, where we've had a lot of natural hazards and things happen. Well, what we're finding out is prices, just like everywhere else, is going up and it's getting a lot more difficult to get homes insured. I talked about the difference between lending insurance, i.e. mortgage insurance, and homeowners insurance. Today I'm talking about homeowners insurance. So sometimes banks, depending on the area of the home, they also want you to insure the home before they give you the money. That is something that happens every now and then, and this happened to me recently in a transaction. I had a client who was coming from an out-of-area location, moving into a new location. So all of the insurance companies, they have homeowners insurance, car insurance. They already had an established insurance with another brokerage, and they wanted to continue to utilize them even though they were moving to a new location. So we're going through the process of needing to insure their home prior to the close of escrow so that way the lending can be funded. However, what happened is that the previous insurance holder, when requested from myself, my brokerage, certain information, pictures, and other things for the new home, when they were given this information, for some reason or another, decided that they were going to go on vacation. Yeah, I mean, we all need vacations, but hey, man, you got a job to do. And, you know, it would have been very helpful. Unfortunately, they left the pile, the stack, the file, everything on their desk, and they went off on vacation. What happened is on our end, it delayed our close of escrow. A very unfortunate situation because it ended up costing my client more in the long run. Short story is that when this happened, I suggested that, hey, we go ahead and grab a local expert, a local insurance company that actually happens to be the same brand that they're already using, so the transition, the information that could be sent over and applied wouldn't be very delayed at all. If anything, it would have been a lot quicker. However, moving from his old insurance holder to a new insurance holder was going to cost in excess of $2,000 to $3,000, which my client was like, I don't really want to have to pay that. I'd rather stick with my guy. So instead of switching over, he decided to stay with his guy. Totally up to him, his decision. But again, it delayed our escrow, which meant that it took longer. So because it took longer, the seller said, hey, you know, we were supposed to close last month. Now we're closing in this month, and it's costing me, because I had to pay a mortgage payment now, it's costing me more. So I'm going to pass that off to you to compensate me because you delayed this close of escrow. This let me know that, hey, sometimes you're going to get into a property that you want to purchase and there's going to be some conditions from the banks. As a professional, know what these conditions are, and if you can, go ahead and get an insurance quote up front as early on as possible. Why this is super important as well is because insurance falls under the physical contingency. Yes, it falls under the physical contingency, which allows you, the buyer, the option to back out if for whatever reason you can't get this property insured. So that's a great way. Another clause also helps you as a professional and as a client to really look at ways to make sure that you're able to get into this process to make it a lot more seamless, and you're not going to be problematic if you do it on early on. Unfortunately, in this case scenario, we didn't know from lending that this was a requirement until about halfway through. We had already removed our physical contingency, so in this case, it didn't really work out for me. So this was definitely a learning experience, because in the past, it was something I did early on, and we were just in a situation to where we thought everything was going to get transferred and a lot more smooth. It just didn't really work out that way. But what I'm suggesting to you, the buyers, and any other professionals that are out there listening, is if you can, do this up front, especially if you're in an area like this. We were in a wooded area, it was open, and just a few years ago, there was major fires. So I understand why lenders and even why the insurance companies are really trying to make sure that they do all their due diligence, which as a professional, that's what I'm trying to do. I'm trying to help you. Sometimes a little bit more money up front can save you in the long run, because yes, my client saved couple $1,000s by sticking with their insurance person. However, it ended up costing them double later on. So sometimes a little bit more up front will save you in the long run. I appreciate y'all for staying tuned. You already know what to do. Hit that like button, subscribe, and ring that bell, baby. And if you got anything you want to let me know, go ahead and drop a comment and let me know if you knew any of this information. Did you know that fire insurance or any type of homeowner's insurance falls under your physical contingency? If you didn't know, now you know. I'm Sirrom Alizem, y'all. Peace.